Good morning, 11/18/2012. Happy Thanksgiving to everyone. What we have here, and it's very, very crucial, my friends, to the SMF users around the world and people who visit our website, it's time to take a look at the bear funds. Now, bear funds go higher when markets sell down. The Russell 2000 is a very, very important index. This thing has broken out when the Russell 2000 had its big correction, right along with the rest of the broader indexes. This bear has been climbing higher and higher. Now, one of the things that we're doing is that we're going to see that if we do get a rally in Thanksgiving and Christmas, is when these things come back down in their support levels, short term, in a very short macro term, they're overbought. However, they're great places to be involved because you can make money. And there's a lot of upside to these things potentially. We can see back in 2009, hell, it was up here at $120, $70 back over here in 2009 when we had the big rallies for the last multi-calendar years. The last peak is going to be at 38 right here. Now, that's right up here is these peaks that we've had. They have been out of favor because we've been in a 5.5 year highs. We've been in a bull trend in calendar 2012. The fear indicators that we've covered, it's time that the bears will be looked at between now and year end. It's how they pull back and set up before they break higher. If the markets are going to rally, then the bears will pull back. When the bears pull back, the broader markets will be breaking out. When these pull back to test their daily moving averages, because they came from a deeply, deeply oversold area, when they go down in value, markets go up. So we will monitor them very carefully for the next year and a half. We'll be watching every one of these plays here. We will be buying the dips here. If Congress fails to pass the budget correctly, as we all know what that is, if they do the tax hikes, if growth continues to contract in GDP, there is no more bull. It's all about bear. So the thing about it is markets will continue to print money on the right side. So a diversification of various different bear funds across the board is what's going to give you the place to be. You're going to want to be where the markets go higher. And the thing about it is, bear funds are very low volume these days. They're not the high volume ones they used to be. Things have changed over the last few years. However, I will tell all our users and all our MMT traders and students around the world that it's time that we're going to take gains in these things. But let me just tell you something. It's time to stay on these on a daily compounded level, because if we totally unwind this market, this is where the money's going to be printing. And I will tell you on the Russell 2000, when this thing is breaking higher, the broader Russell 2000 index is breaking down. Stay tuned. Keep these on your radar list. This Russell 2000 is RWM ProShare Trust Russell 2000.